All right. So as you guys know, my name is Mitchell Joseph. I'm not a financial advisor. Everything is for educational and entertainment purposes as well. You know. So did anybody trade today?
You know that past 2 years that
I'd like to ask.
only had temporary assignments, six of them.
Yeah, did anybody trade today? Unmute your microphone.
Almost
And nobody traded today, I guess. But it's just I want to share some things with you guys. Okay. All right. Not bad. The market has been in some sort of indecision, but it finally made a little movement today to the downside. Yeah. So even like people that trade like Nadex or binary options, if you trade the market, sometimes you could make money off the movement. But the market hasn't been making as much movement as it was making before. So let's get into some basically. I want you guys to be prepared when you guys come out and trade every day. There has to be a plan because you have to understand that like most people they don't plan to fail, but they fail the plan. So they never actually come up with a plan to actually read the context of the market and to basically take what it's giving you, so that you can, play it accordingly. So what I teach you guys, the first thing you want to do is look at the market. And the way you can look at the market is to look at the S&P 500. Now understand that the market's open from 8:30 to 3 Central Time, right? But after the market closes, there's after hours and there's pre-market in the morning. So what that means is that the price is still moving. But now if you follow the futures now, they move 24/7. You understand? So think about it like you could have hopped in the trade where you're just playing the index, so you're playing SPY, right? You're playing the ETF that follows the market. Now the market closes at 3 p.m., but now the price is moving. So by the time it opens the next day, whatever it was before, it's not there anymore. But because the market wasn't open, you was at the mercy of the market to open up in order to sell it. Does that make sense? So in that way, if you play futures now, you can buy and sell at 2 o'clock in the morning whenever the price is not going your way or things change. You can actually make real time adjustments. So the main thing you want to do is look at the future. So let me just show you this document. All right. So you want to ask yourself, what are the futures doing? You know, and in case you guys don't know what the future is, what symbol is for this future, it's the ES, the E minis, the ES minis, and that follows the market. So you want to know what is the current support and what is the current resistance. So you kind of want to plot it every day as you're watching. You're seeing what kind of day was it the day before and such, because this is what's helping you to realize what direction it may go. So then I'll write my prediction, what that direction I think it will go, and why I think it'll go in that direction. You know what I mean? So once I've made my own conclusion, now I'm testing it, and then the question is, what's the next support? What's the next resistance? What's the next level up? And what's the next level down? So now at the end of the day, I can actually go back and see if I was right. So even if I don't trade, this is still a good practice for me to start to gain market awareness on what the market loves to do, on what days, and just seeing whatever pattern is playing out. So after that, I'll have a watch list, where I'll put certain stocks or ETFs or whatever that I'm watching. So from there, you put the tickers, sign, you put the support, you put the resistance, and then you do the same thing. So you ask, what direction do I think this stock will go? And from there, you need a price target. So like I was saying, last class, whenever you trade, you're going to war. So if you're going to war, you need a battle plan. When things go wrong, when everything goes wrong, when things go right, you know how to get in and out, how to escape. Like you really need to have a full plan. So same way when you approach the market, you need to have a plan on, okay, so this is my entry. From this entry, where is my stop loss? At what point am I proven wrong? And after that, I'm out, you know, because it's better for you to just cut your losers and keep the rest of that capital and put it on a potential winner. You know what I mean? So you got to have your exit plan, you got to have your entry, and then you also have to have your target. Like, what price do I want to try to sell at? You know, because what I like to do is buy multiple contracts. So some of the contracts I'll try to sell them at certain prices while I have stop losses on the others. So, so from here, you gotta think what is your stop loss, and then you gotta think about what is your reward to risk ratio. So like if my stop loss is 20%, I better be able to make at least 40. Does that make sense to everybody? So if this is my stop loss at 40%, then I need to at least be able to capture a target of 2 to 1. So then you look at the option chain. What does the option chain look like? So when you look at the option chain, guys, I'm gonna go over some of this. You want to see what story is the option chain telling you. Are things on sale or are things moving up? And have they moved up drastically or steadily? You know? So what's good is at the end of this, then I write whether I'm right or wrong. And the main thing is it's not about the money. It's about following the plan. Because for me, it's about see profit, take profit. So as soon as I see the profit, I have to take the profit. But there are times where I look at the profit and I don't take it right away, and I just wonder, like, why am I not taking it right away? And that's the psychology of it that I'm still mastering, is being able to be like a robot, you know, not to have any emotion. All right. So if you guys want a copy of that, I'm gonna put it on my coffee page. Let me just share the link right now with you guys. All right, yeah. So as you guys know, the link is in the chat for anybody interested in that document, and also the other one I was going over with you guys the other day. I just want to run through it real quick too. They're both be on my coffee page, but this one right here, and I'm gonna go over it real quick, and then I'm gonna hop into some charts from there. All right. So remember, when what we want to do is all about the move. So we want to find things that are ready to move. That way we don't have to buy options with too much time in order to capture the move. That's the way to make the most money in the least amount of time with the least amount of effort. But it's also more risky, and which is why you keep it light and you don't play too much. You don't put too much money out there at once. You slowly take a position. You might buy one contract, then buy another, then buy another. You know, but you'd rather buy it as the price is pushing up than when the price is going down, unless it already like came down, then you could maybe buy it for a discount. So remember, we check the 4-hour chart for the big picture, and we check massive volume. The easiest way to see massive volume is to see big candles. Big candles are strong and they have small wicks. Remember, wicks are weakness. So the fact that it's small, that means there's not a lot of weakness. There's more strength in the trend, and it leads to continuation. So these are trending moves where it picks a direction and it goes. We love finding these setups. This is how we make our money. So then there's also the candles that are trading in a range. If the range is defined and it has enough space, we can catch it either at the top of the range or the bottom of the range and play the move in the opposite direction. That way we have that much potential to reach that resistance level. We'll know that there's not really much resistance until that height. So in that way, this is a way for us to make money. And also, if it's really within the range and it moves a lot, every time it hits the bottom and the top and it keeps doing that, we can keep playing that direction and selling at the opposite end. So this is why these days could be very profitable, these narrow range days. All right. So the main thing with these narrow range days is that you got to understand that it's in a range. So you're going to see small candles with wicks. And you're going to see a lot of bottoming and topping where they're just kind of just staying around the top or staying around the bottom. So the main thing is that you make sure you have your entry, your stop loss, your target profit, and your exit. So just like everything, you need a plan. What price am I getting in at? What price, if it goes to this point, I'm proving wrong and I'm out of there. And then what price can I try to hit that I could try to shoot at and also move my stop loss up into at the same time. All right. So now if the range is tight and you see a bunch of small candles, just avoid it. You don't want to get chopped up. You do not want to get chopped up in the market trying to trade in the tight range where there's a lot of small candles, you know? So just to reiterate, after we look at the big move, when we look at the 4 hour, we look at the daily, we see big candles and they have small wicks. That shows that there's strength in the trend. And then that's a trending move. Now, if we see that there's already a support and resistance that the price has been bouncing off of, we can also play that as well. And that's when it's within a big enough range that we can make money off of the top and the bottoms. But with everything, you need to have your entry, your stop loss. So especially if it's within the range, you already know you can use the range as your stop loss. So if you want to play it down, your stop loss would be above the ceiling. And if you want to play it up, your stop loss would be under the ceiling. You know, I mean under the floor, under the support. So those are the setups that we look for, you know. And if it's a tight range with small candles and a bunch of wicks, we don't want that. We want conviction, you know. So this is where you check, you know, like I said, candles with small wicks, small wicks. You know, you can check your moving averages, your Bollinger Bands, you know, but you also want to check your past support. So it's very important. You look in the past, you see where was this support and resistance before to see that while it's moving in direction, where it could find some opposition on the way, you know. Basically, you want to have little or no resistance that can oppose the movement in your desired direction. All right. So now with the range, you look for the trend lines, you look for support, you look for these lines. And a lot of times if it's in a resistance, it's coming up, it's coming back, usually on the third touch, it breaks. And make sure you keep your stop loss. So if you're interested in this PDF, it's also going to be on my coffee page. But let's go into the charts. So remember, I said, first thing you want to do is check the futures. Check the futures. So this is the ES mini. This is the future for the S&P 500. Now, let's go into the day, right? So these are run 24/7. So it's all about the time frame. So let's say I do the 30-minute time frame. All right. So now I'm on the 30-minute time frame just to show you guys what happened throughout the day. All right, with the S&P 500. So again, this is the ES mini futures. These run 24/7, and by knowing what the futures do, You don't know what the market is going to do for the day by studying the futures. So this line right here is, I believe it's 8:30. Where's 8:30? 6, 7, right here. Okay. So this is the beginning of the day. All right. At the end of the day. Let me see. So this is the beginning of today. So you see today at 8:30, the market rallied only to hit a resistance. Look, it's a past resistance. Do you see? You guys see that? So the market hit that past resistance, as you can see, ever since the market, this line has been important in the past. You guys see key levels? You guys see what I'm doing there? So I found a key level that the market has had a hard time breaking ever since it basically double top right here, triple top even, you know?
You said the S&P 500 minis, they run 24/7.
Yeah, that's what futures are. They run 24/7, unlike the stock market. So that's the benefit of trading futures is that, let's say, see, at the stock market, you're at the mercy of the gap up and the gap down. You know what I mean? So like you wake up and then you find out overnight the price been moving. You know what I mean? I mean, not necessarily overnight, but early in the morning, you know?
Oh yeah, like the
Yeah.
pre-market trade.
Yeah, pre-market in the after hours. But with
Yeah.
futures, the second it moves in a direction that you don't want it to, you can just get out the trade. 2 o'clock in the morning, you're out the trade. So then when the next morning comes and people are down, you are out. You know what I mean?
Richard, let me ask you a question. I apologize for chiming in late. So, I never noticed until recently before when I was trading, the micros, right? I never noticed the volume, but just recently within the last week, I started looking at volume. It may only be like 5 and 6 and 40 and 30. Is that because it's micros or just because the volume had been kind of low like last week?
Like volume kind of like this, kind of like something like, is this the type of volume you look at? How do you look at your volume?
I use the chart trader.
But this,
So I go to.
is it like little bars? Is it like bars right here? Does it show up like bars? No.
No, I do have a volume profile I just put on there because I
you
bought
put
the
volume
$1,000
profile.
Ninja license.
Okay.
Yeah, but wasn't using that. You know how you on Ninja Trader and you can you right click on the chart, you hit properties, and then it gives you the chart trader, and then on the side it kind of looks like a Superdome kind of. But that's where you can kind of do your trades, and it shows you how many people I guess are in the market.
Really? See, I need to. I'm not too familiar with Ninja Trader. I did the first few videos and then I never actually played with it myself. So I definitely am intrigued to hear that. They'll tell you the volume. Is it like a chart for the volume?
Yeah, as far as I believe, that's what it is because it's showing you the numbers, which coincide how many people are buying.
Okay. I do remember that from the video. It's basically a volume chart. It's a volume chart, and that's
it's kind of
a
a
cool
volume
way.
chart.
Yeah, it's like you
But
just said it.
notice it's been super low, super low, and I never noticed it before. Because we used, so I don't know, but the volume profile is good too.
Okay. The way, honestly, I sometimes I don't even use volume bars. The way I gauge volume is literally from the size of the bars themselves. You know what I mean? Like for example, this bar right here, huge volume. How do I know it's a huge bar? You know what I mean? So it's kind of relative though, because you gotta compare like when volume gets low, then you gotta compare it to the last few bars that's around it. You know what I mean? But that's just an easy way for me to look at volume.
So do me a favor because I'm driving. I'm kind of looking at my phone while I'm driving. Circle where you say you look at the bars. You say look at the candle, or what do you mean you look at the bars?
The candle itself, like right here. Like for
Oh, the actual
example,
candle itself.
yeah, like this candle right here, this big red candle. That big red candle has huge volume. That if I look at it,
Oh yeah.
it has candle for it has enough volume that it already ate these three candles, these three green candles, and it probably could have ate a second time. So I could say this bar probably could have ate the last 6 candles within itself. You know what I mean? So like I look at that. So this is called an engulfing candle. You ever heard of it? Yeah. So
Oh yeah, I know that.
yeah, so that's a very strong sign to the bear that the bears are in control. So
you know on where is it? Is it Ninja Trader? They also have one that's called a and I'll have to show it to you, but it actually shows you a circle, and it'll show you on the candle what the volume is as well. And so to show you if it was more, more buys or more sales. So the color.
Yeah, that's good. Because you want to know at the end of the day who's winning the battle. Is it the Bears or the Bulls? You know, that's really what you're really looking for. And it's like different time frames.
Red or green, but you literally could click. Yeah.
But you have to know how to look at it on different time frames to understand what's going on. So actually, let me go over that real quick. So, for example, like go to the monthly, right? This is 1 month. So you go to the monthly, right? Understand what's going on, right? From the monthly. Because price aggregates. So remember, this 1 monthly candle is what every other time frame less than it is inside of it. Every other time frame that's smaller than this green candle right here is contained within that candle. Does that make sense? So,
yeah.
So inside this candle, there's a universe. But let's understand what's going on with that candle. So it's a green candle, right? This is for the month. It's a green candle for the month of November. And yeah. So you see within the 10 days of November, you see that the price of the market opened at 4,608. And then it reached a high of 4,710, right? And then it went to where it is right now, which is 4,653, right? So on the SPY, that's why I like the SPY because it's like 3 digits. So on the SPY, this would be like 460 to 470 to 464. You know what I mean? That's just easier for me to think about thousands while I'm remembering prices. Oh, it also made a low of 4,586. So I call that 458 or 459 in my head. You know what I mean? Because I look at the SPY. You know what I mean? Matter of fact, let's just look at the SPY. You guys get the point. You look at the futures to see what you can't see when you are looking at the SPY.
Yeah, that SPY took all my money for the last couple of days. It was horrible.
And it's like I look at it so much. It's like I know it like I know it like a person, you know. But so here's the SPY on the monthly. I'm gonna take off these for a second. So look at what the market has been doing on the month. So look, remember, here's August. Remember September? Bad month, terrible. Things sold up. But look, October, we came back. And not only that, we broke the highs. So if you know anything about the strat, this right here, so like this could have been the entry for the monthly to go in. So it's good. One thing I learned from the strat is like it's good to look at the bigger time frames to understand is there any continuity? Do they match up? Because once you understand when they match up, when they don't, you understand how the candles are being formed, and you understand. So let me show you what I mean. So you see that it's going up. You see that the SPY opened at 460. Like I said, remember I said it 460, 470, 471. Low at 457, and it closed at 464, 463. So now understand this, guys, right? Where did this SPY open at? 460, right? So in order for this to be a red candle on the month, the SPY has to drop below 460. Did you guys catch that? Do the trends in the futures correlate with overall market? Yes, they do. So the ES follows the SPY. Actually, the SPY follows the ES. You know, actually, I can say they all follow the SPX, which is the index itself. So the SPX is the index, the SPY is the ETF, and the ES is the future, all for the S&P 500. You guys caught that? So that's what I'm saying. So this would have to go down to catch that. So now look at this candle and like, what can we understand?
A lot of price rejection.
There's a lot of price rejection. So that means that within this month, at some point, the price went up this high and it got shot down. So now we go to weekly, we're gonna see what weeks did this happen. This happened the first week, second week, third week, fourth week. You see what I'm saying? So now let's look at the weekly. Look at that. So the month started, here's October, November. So right here. So look, the first week of November, we had a good rally. It went from 460 to 480, 488. But look, at some point during the week, during this week, it went up. It had a small little wick right here. You see the small little wick? So it made a high. That means at some point it was green. See that? And then it just went down for the week. You know, so now we're down for the week. But now we understand that in order for the week to be green, it has to pass this point right here. I'll just make a line. Do I follow the drop of the red candle? Yes, I follow. Okay. Yeah. So so you just break it down. So now from the week we go to the day. But notice that the month was green, the week is red. Now let's look at the day. We got about 10 minutes. The day is red. Look at that. The day is red. So then from here, we can look at the 1 hour, because the 1 hour really shows what's in control. You can look at the 4 hour too, but it's really the 1 hour that breaks it down. So the 1 hour from the day, it's also red. So this is not showing full time frame continuity because it's green on the month. So that meant, but the fact that we've seen the wick, like if we go back on the month and we've seen that there's a lot of price rejection, that means that this month could go the other way and become red. It's a possibility. You guys see that? All right. So in this last 10 minutes, let me just go over the trade that I made 220% on today. It was with XYL, the one from yesterday. So, but I sold it today. So check it out. So I sold XYL today, and I also hopped in the other direction. So I took 25% from the put and 50% from the call. XLY. So XLY, remember I told you, it's the consumer discretionary fund. It's basically it's the sector for consumer discretionaries. So it's consumer discretionary goods and services. All right. So Home Depot and Lowe's and Target and stores and stuff. But notice what's happening on the month, right? So the month started very strong, and you can see that if you go from the month to the daily. Actually, I'll go from the month to the weekly to the daily, so you can see the whole thing. So look at the weekly. You see the month, look at the weekly, and now look at the daily. Let me make this a little bit bigger. and look at the daily. So you see that this week it started to come down, but you see the last 5 weeks it's been shooting up because this quarter, consumer discretionaries is going to be the biggest quarter, because since last year during COVID, nobody was outside, but now everybody's outside. Everybody can do their shopping, and the shopping is going to be a very big. So all I've been doing is playing the pullbacks and the small movements in this. So I think I had showed you guys this yesterday. So let me go into the 30-minute. Got about 6 minutes. All right. Come on. So this is how I play this. So the first, I'll change the color just so I can talk about it, right? So from the white line, I had played this till yesterday, right? I played it yesterday. So this is yesterday, right, at 8:30, and the day ended right here. So the day ended. So this big green bar, that's today. So before this big green bar, I played this all the way down. So then when it opened up today and it started low, because look, it opened up down here. You guys see where it opened today? So when it opened today, you seen that it was shot up and then it went down. But I got rid of it right at the open today. Let me break this down even further. 15 minutes. So this is yesterday. I was up 150%, and then today this came down here, and I sold it in the morning and for 225%. And then once the price came back and crossed this right here, like, so let me go to the 5 minutes so you can see. Oh, no, not 5 months, 5 minutes, and make this a little bigger. So I sold myself. So once I sold it in this candle, right, the first 5 minutes of the market, I sold it. I was out. Now I said once the price crosses, basically this candle, it'd be a sign of strength. So I basically, if I brought this line a little, basically I said once it crosses this price, I would hop in for the buy, and I was able to hop in from here to here, and I was able to probably sell it around the red line, and that was a quick 50%. But the main thing is the strategy is once the price breaks the highs or the lows of the previous. But the main thing is you start from a bigger time frame and you work your way down for your entry. So I start from the, let's say I start from the 4 hour, or I'll start from the day, right? Start from the day, and I'll see what's going on. So for example, like once it breaks this low, that could have been a sign of going for the sell, and you would have had up till here to take your profit. Any questions? Got about 3 minutes. Any questions?
So how will you look at hopping in it tomorrow?
Tomorrow. So tomorrow, all right. So that's a good question. So tomorrow, what you always do is you want to make a line around the high and the low. So I'll put this line right here, and I'll just this line, and I'll bring it down here, right? So do I even have a play in this still or no? I might still have a contract left in it on the call side. But so basically, I'm gonna see where price grows. If price breaks the yellow line, it's calls. If price breaks the green line, it's puts. Does that make sense?
Okay.
Yeah. And that's all you gotta do. So like every day you just adjust that. You keep enclosing the range of every day, and then that way we'll show you when there's a directional move. You know what I mean?
What's the yellow line?
So the yellow line is just the high, just the highs of today.
Okay, I saw the white line up there as well, so that threw me.
That was from this day when it broke. This
Okay.
from this day when it broke. When I first made the 150%, and then I sold it today down here for 220.
Cool,
But
appreciate it.
yeah, and
Do
then
you play this every day?
No, I just so it's because I've been watching this for a while. Like, even though I don't play it every day, but I see the opportunity because this is very sensitive. Like, from I had a 202 put, and like just from that, the money really ran fast. It was very sensitive, you know. I felt like it felt like I was playing like a leverage ETF. Like, so I just started to play it, and then but I know that it ran up so much that it would have at least a healthy pullback. But overall, it still is on an uptrend. You know what I mean? And since I've been watching it, I'm like, just keep watching it, you know, because it's better to not play a lot of things, you know. But another one is and I have like a minute left, but this is another one right here that I played today.
Yeah, I'm still in that one. I got some stocks just to kind of hold it.
This is gonna keep going. There's some news like OPEC and oil, and like they're not trying to give more supply. So so Biden might ban exporting oil in order to keep the cost down. Yeah. But if that happens, that would be bad for gas and oil and energy. But let's see what happens. But these lines, as you notice, right? First notice, I got like a minute left, less than a minute. It was inside this pink channel, it broke out. Then this blue line was support, and then now it's at a resistance level, and we're gonna see if it's gonna break it. But so far, so good. But that's it for today. I know the time's gonna run out. Any questions before I go?
Thank you.
All right. Thank you guys for coming today. I'll be back on Monday. I might do like a pop-up. Thank you all. Time's over. Thank you for coming, guys. The link's in the chat. Thank you for coming. Have a good, wonderful rest of your evening.
All right, thank you, with y'all.
All right, no problem.